Welcome to this week's episode of the Four Horsemen of Real Estate Podcast. I'm your host, Neil D'Souza. We're going to talk about the recent news of U.S. President-elect Donald Trump's proposed 25% tariff on Canadian and Mexican imports. That's really sparked so much concern about its potential impact. Now, these tariffs are aimed at addressing immigration and drug trafficking concerns, and a lot of people are concerned that they could create significant economic impacts and challenges for Canada, with Canada, of course, exporting tons of stuff to the U.S. The tariff could really contract our economy. Okay, now here's the piece that people really want to know. Neil, do you think that these are really going to go through? I don't. In fact, I think this is really Donald Trump's way of getting the Mexican politicians as well to move forward on securing their own borders. Here at home in Canada, we're actually seeing, I know I'm in Mexico, but back home in Canada, what we're seeing is premiers taking on the job of the federal government. Because the Liberal government won't protect the borders, the premiers of each of the provinces are taking on this responsibility. They're reallocating resources because they know it means their province, their people that are going to be hurting, while Ottawa sits there in the House of Commons and does nothing and continues to, prorogue the entire assembly. So do I think Trump will actually do it? No, I think we'll find a way to tighten up on the borders, to spend more money at the borders to stop a lot more of the drugs coming in, immigrants that might be trying to get through and trying to jump into the States, illegal immigration. That's really what I expect to see, because January is right around the corner, and we will see a much more concrete response from, at the very minimum, the provincial government, maybe, hopefully, even the federal government. Now, there are three main concerns that we're going to talk about here today. Concerns about how it might affect energy and automotive, weaken the Canadian dollar, but for real estate investors, these changes raise three key concerns. Number one, reduced housing demand due to job losses, increased construction costs for pricier materials, and potential volatility in property values and rental incomes. So let's dive into these challenges on this week's episode of the Four Horsemen of Real Estate Podcast. All right, let's dive deeper into how we, as real estate investors, can turn these challenges into opportunities. So remember, there's no such thing as a problem, only opportunities for those who know how to think differently. So the first thing that we want to talk about is the reduced housing demand due to job losses. This could be a real thing that could impact us if we see these 25% tariffs. When industry shrink, layoffs happen. Housing demand often takes a hit in affected areas. Now, the poor mindset sees this as the end of the world. The rich mindset sees this as a sign to adapt and grow. Now, first of all, look for the markets that are resilient. Rich Dad, Poor Dad, Robert Kiyosaki would always say, follow the jobs. Cities with diversified economies or areas with government and healthcare employment, they will always weather the storm better than others. So if you're investing in smaller towns, focus on places with emerging industries or stable populations. Secondly, target resistant areas, recession-resistant property types, specifically, affordable housing, multifamily properties, rental units in growing neighborhoods. They always remain in demand even during tough times. When people lose their jobs or their incomes dip, they don't stop needing a place to live. They just adjust to what they can afford. Be the investor who provides that solution. Now, lastly, remember, this is a cycle. It goes round and around like these plants. They come up, they die, they come back up again. Smart investors don't panic. They plan. Now, when demand is low, prices often fall. Now, not all real estate is going to drop equally. Position yourself to acquire properties at a discount during a potential downturn. If these tariffs hit our Canadian economy, you will see the impact on real estate. Now, the best deals are made in the toughest time. Okay, secondly, we talked about increased construction costs. We know that the rising cost for materials and labor can scare a lot of people out of the market. But let me give you some advice. Don't focus on what things cost. Focus on what they're worth. For developers, this is a time that they get creative. They work smarter, not harder. They explore cost-saving options like sourcing local materials or negotiating better terms with contractors because the work starts to slow down. So contractors are willing to give discounts because we have more soft lumber that's not going into the States. There is a greater ability to negotiate on the price of lumber. I don't know, maybe some people this might be a point to talk about recycled materials or modular construction or some other innovation costs. But at the end of the day, developers are going to look for the opportunity to cut costs. Every dollar you save goes straight to the bottom line. Now, for the buy and hold investors, guys, for those of you out there, now's the time to sort of pivot. Take on the risk of maybe some new construction where you can buy properties that are maybe already built or already producing income. Look for the assets that don't just sit there. They work for you from day one. Now, here's the thing. I want you guys to think long and hard, and I want you to think long term, because inflation on construction materials, on all these development costs can actually drive up replacement costs. We tend to see that when we're looking at appraisals. So you will see that this type of tariff will actually, over the long term, drive up what's called a replacement cost approach, which means the value of the existing property will rise. If you own quality assets, you're going to be positioning yourself to benefit from this appreciation over time. Okay, now finally, the third item about these tariffs, volatility in property markets across the country. Where are you going to find the value? And I'm going to tell you right now, it's going to be in rental income. Economic uncertainty can make real estate markets feel unpredictable. The poor mindset reacts emotionally. The rich mindset builds a plan and a cash reserve. First, protect your cash flow. You've heard it said, cash flow is king. Make sure your portfolio has properties with strong, stable rental demand. Affordable properties and units in great locations will stay rented always, even during economic downturns. If your tenants lose their jobs, you can always offer them incentives to keep them. So a small rent concession is better than an empty unit. Now, if you're in rentals in Ontario, good luck. I don't have any great advice for you other than keep large cash reserves to weather those professional rent dodgers. We are already seeing them in the market, and the Landlord Tenancy Board in Ontario is killing investors. So guys, please make sure you keep cash reserves to be able to last out those professional rent dodgers. Regular tenants will be happy to pay you. You might have to give them concessions. Now, in this area, you may have to lock in some costs. If you're financing properties, consider switching to fixed rates. When the rates drop, wait, let me back up. When the rates drop, you may consider doing that. Rising interest rate won't touch you if your payments are locked in. Some of you did that before the rates went up, and some of you did not. You have to control the controllables. We're in our dropping rate economy right now. So breathe, lock down the costs that you can, and finally, stay liquid. As mentioned, keep a cash reserve for unexpected vacancies, repairs, other opportunities. Volatility isn't something to fear. It's something to prepare for. The prepared investor thrives when everyone else is panicking. Closing thoughts, guys. Challenges like these, Donald Trump talking about putting on more tariffs or interest rates going down, the dollar dropping, all of these things separate the poor mindset from the rich mindset. The poor mindset says this is too risky. The rich mindset says this is an opportunity to grow. As investors, our job isn't to predict the future. It's to position ourselves to thrive no matter what comes our way. And that's how you build wealth. Well, guys, I'm here in sunny Puerto Vallarta, Mexico, loving my time down here. As you guys know, I got my sombrero from Texas, my visit down there, and the Mexicans love it. Me walking around in it. I'm having a great time down here with me, my wife, getting some time away. It's been a busy year, as you guys know, a lot of things going on, getting a little bit of time off. Looking forward to coming back to snowy Canada and having Christmas vacation with the family. And, wishing you guys all the best and for next year, this Christmas. And we'll be right here for you guys on the Four Horsemen Real Estate Podcast. We'll see you guys again next time.
When the ones around trust in their word, they walk the talk in the world of investment, they make their mark.